Nupur, I would have come to you last, but I think it's might as well put that question to you. You put money into the venture capital funds, and you just told me earlier that you are looking at a few venture capital funds where IFC would like to put money. So, what would, as a DFI, what would be your criteria for putting money in certain VCs, and what kind of investment thesis or themes they should have for IFC to be able to put money with the VCs?
Can I answer that in a more general manner?
Sure.
Yeah, thanks. So, I mean, even if we are a DFI, so very specific to IFC, I think at the end of it, we are an investor. And when it came to the VC fund space and the general early stage investing space in India, things have really evolved in the last couple of years. There is obviously an uptick in the activity. And, as Sandeep has mentioned, the ecosystem has really evolved, and the quality of talent that is available not only in entrepreneurs, but also in people who are supporting those entrepreneurs. So it's not only about the quality of ideas, it's also about the ability to execute on those ideas. Investors in those ideas, mentors, advisors. So generally the ecosystem has really evolved, and that we think is extremely encouraging as an investor in that space. And with guys like Rahul coming in and helping expand the capital structure, I think the opportunity is just going to get stronger. The challenge that we see currently is in closing the loop and getting to see exits per se. And from our point of view, as people who are providing the capital that is going to get invested in all of these businesses, ultimately what we need is to get that capital back. And that is a cycle that the Indian early stage space hasn't really demonstrated as being established. And if you just take a step back and you say, oh, look at Silicon Valley, we've got these really cool deals happening there, a couple of $100 million here and there doesn't make a difference. But India really doesn't have the presence of those kind of players that you have in Silicon Valley, right? So the access to a strategic exit is not that easy if you're sitting here, and that is where your investor becomes really critical, your GP, your fund manager becomes really critical. What is the kind of value they can add, and what is the kind of network they have just to enable that kind of exit to actually happen. And I mean, I think we all realize that the Indian IPO market is not exactly geared up for a Groupon or a LinkedIn or a Facebook. So that's the one open gap that we feel, but at the same time we are pretty confident that the opportunity is here, and we are very happy to back it.
Thanks, Nupur. TCM, I'll just skip Neeraj. I'll go to TCM first, right? Nupur just raised a point that India is still not the same as what Silicon Valley is, although the ecosystem has evolved a lot for early stage, right? You are closest in Bangalore to what Silicon Valley is. So what do you see the differences is in terms of the approach of VCs in Silicon Valley and the kind of entrepreneurs and which you see there, and what is the closest to Silicon Valley is Bangalore, from where you come?
Yeah, so when we started investing, I initially between 1998 and 2001, I was part of World, and we've seen the internet boom and bust. At that time, it was largely Bombay driven, I would say. But in the when startups started again in terms of technology side, sometime in 2005, 2006. And today what we are seeing is largely a concentration in Bangalore, and then actually NCR, second largest in terms of number of startups, amount of VC money that is going in. Though there was one article which said that Bombay got a lot more money in the first half, but that's taking into account a few companies which have moved to Bangalore, like Quicker and others, right? So the reason is the ecosystem there is very strong. So from the tech talent that is there, pretty much every technology company's R&D lab is in Bangalore, right? And today the joke is, you step out onto this pavement, if there is some, then you will actually stumble onto either an entrepreneur or a startup employee, angel investor or a VC, right? That's how vibrant the place is, right? So it's very exciting. Any place where you go, you get to see extremely competitive companies who are trying to disrupt. And today the disruption cycle has changed, right? What used to take possibly 10 years for Google to get disrupted by somebody else, even in India, you see in the business model side, in 2-3 years there is a competitor who's coming and then completely new. Because the mobile revolution that's bringing in fact, we see India already has 250 plus million mobile users on the internet, and that will cross 500 in the next 3 years' time. That's creating a completely new way of doing stuff. What we call as millennials, 18 to 35, and most of them don't even get to news in any of the traditional media, right? So we look at it as a big opportunity coming up, right? Beyond, obviously there is an e-commerce wave that has built big companies, but today there are mobile first companies which are coming up. Today there are media companies which are coming up, which are going to disrupt a lot more future.
Sandeep, you have worked both in Silicon Valley and now in India, right? So how do you find the entrepreneurs different? What's the approach in the sense whether you have a whole audience here which consists of entrepreneurs, right? So is there any piece of advice you give to how do they differ, or what's the few things they should learn from Silicon Valley entrepreneurs which would help them deal and communicate more with you?
There's always this question of our models here are copy-paste. And the question always comes up saying, oh, it's an online travel business there, you just copied and brought it here. And it's interesting. Consumption among consumers is generally similar. People buy clothes, they buy food, they buy gadgets. So in general, most opportunities are going to flow in similar areas. I think what's interesting and unique about India is the end implementation of it always looks a bit different. So yeah, we were looking the other day, and I'm sure Neeraj will talk about this later as well, but if you look at the car and cab market, someone like Uber has decided to facilitate rickshaw access in India, which is very different from the premium high-end stuff that they go after. So I guess to come back to your question on this, it's hard to just copy the learnings from there or the views from there and just bring them here. I think it's very instructive to understand the business model options that may exist. So suddenly you have a born on the internet brand. Suddenly you have access versus ownership in terms of an idea. You have inventory less hotel rooms. But it just doesn't mean that those same models and concepts are going to get applied in the exact way here. I think you have to put the Indian twist on the entire system and go about it that way. I think the aggression or conviction or sort of, I think the ruthlessness with which execution takes place there is very instructive. I think that there's a deep conviction and a passion that a lot can be learned from, and I think those are just more intrinsic entrepreneurial traits that we see in a lot of the companies we work with here. I mean, I worked with the team at InMobi very early on, and they're just sole clear desire to win was so strong, and I think those types of traits are great. But I think business models and things like that have a lot of nuances that need to be adjusted for differently.
Thanks. Rahul, I think you have just raised a fund and you are in the process. What are the 3 most important things you would look for in an entrepreneur before you put your first money in?
Sure. So, I wear a couple of different hats. I'm also quite actively involved on the angel side, and then there's things that we do on the debt side as well. But broadly speaking, I think many of us, the first principle is who you backing, right? So there's a tremendous amount of weightage on who's the team, who's the founder, what are their motivations. I think the second piece that you try and figure out is venture rides a trend. It's very hard for one company to make a market. So I think it's important to be able to see either a macro or a particular wave coming. The challenge in venture is, do you go too early, do you go too late? But it's very hard for one company to build an industry. So the second thing you try and figure out is there a wave, is there a trend, is there a pattern that we're seeing that we can jump onto and become number 1, 2, or 3? Otherwise, you're not relevant, right? So I think the second part that you would look for is there a trend that I'm excited about? Is there a big problem that can be solved here? And the third part, depending on how people think about, horizons is, in a lot of ways, is this something that is going to be capital efficient? And today, capital efficiency is going to gone out of the window. But in a lot of ways, you ask yourself if I put in $1, can I make 2? If I put in 2, can I make 5, right? So is there operating leverage in this business? Because over time, that will drive margins, it'll drive profitability, it'll drive the ability to attract in incremental capital. So you also have to think about the scalability, which is a term that you'll hear a lot. And that comes from saying, is this purely a body business? Or is there real IP, real technology, something that can stand the test of time?
Right, Neeraj, you raised money in 2006, am I right? Right? It's been almost a decade. So how do you feel that how things have changed now then? Would you have preferred that you would have raised money now and you would have got probably 10 times more than what you got in 2006? How would you?
It all depends on the need of the business at that time. So in 2006, when I went out to raise money, actually the business demanded money to be raised at that time because the business I was earlier in, that was staff transportation, was actually reaping a lot of profits. It was a profitable business. We were having large turnovers, but the license that we got that was for operating radio taxis in Mumbai was for putting in 10,000 taxis. And when we even talk of a capital cost of 5 lakh rupees for each cab, we're talking of 500 crore rupees. So that was clearly not beyond, it was not possible for me to individually put that kind of money, and that was the need of the hour to go out and raise money. Yeah, the point of deliberation could be that whether the amount that was raised, with the valuation that was done at that time, what could be right, what could be wrong. But I think the more prudent call at that time was to get the money. Because if I wanted to get into the business and I wanted to make it big, I thought that getting the money was more important. Getting what valuation and at what rate was secondary for me. Because that was something which was going to take us to the next level. And to go on to that next level, I thought the more important thing would be to get the money in the business and then scale it up.
So would and TCM talked about disruption, right? So do you believe that with the new aggregators, the app-based aggregators who have come in the market have disrupted the model which you've followed in 2005, 2006? And how are you going to cope with it and how your investors are reacting to that?
I would not say that the model has been disruptive. I would think the model has evolved. Because even when we came in, it was more of a black and yellow taxis that were operating that time. And I think that we were the first company to actually organize the taxi space. We set up a call center. We had a facility for people to call up for a taxi. That time, there were no mobile applications that were available and people could actually use a mobile app. The trend of mobile apps started probably in the year 2011, and that is the time we also started with our mobile app. The big difference was that we were governed by the radio taxi license, which was the government very clearly mandated us to use only a taxi which had a meter fixed in, it had a CNG, a driver needed to have a badge. We didn't think out of the box and thought that we could also look at probably going in for a tourist taxi and deploying it in the segment. Because the legal laws and the frameworks were somewhere not very clear at that time whether you could actually use a tourist taxi to use in the city for the commuter pickup and drop. Anyways, but in 2011 we started the mobile app and we also had an app application in place. That's when we launched Meru, Flexi and then Genie. I think the big difference has been the amount of capital that is available in this business. The money that we deployed was what we felt was necessary to make it a good, scalable, profitable business. Now the businesses have not become about probably profits is not something that we want to look at right now. We just want to see that how big the business can be, how many locations we could be present in, how many trips we can do in a day, how many cars we could have. So the amount of capital that is getting into the business is far greater and far higher than one would expect in this kind of a segment. So it is only to be seen in future whether the kind of money that is being pumped in the business, whether the kind of money that is being coming in most of the e-commerce companies, whether the investors would be able to make the returns and get some money out of the businesses is something that time will tell.
I think Neeraj has probably raised a question for TCM, right? Would you ever make money?
Yeah, we have been making money in the exits that we have
Oh,
made.
that's for Nupur, right?
Yeah. So, yeah, I think the important thing, in fact, this is a very, the big elephant in the room is, at least in wherever VC stock meet, is there a bubble? Are the valuations running away? Is too much money chasing too few good opportunities? I think that is there to some extent, but I think the opportunity is getting priced today, and the execution capabilities are getting priced. So while a few companies get funded a lot of money, there are many others which are not even getting the first round funding. So there is a, because opportunity available, IDG invests possibly in one company out of 100 that we review. So that is the opportunity set available for us to be able to identify where we want to put our money with an ability. So it's a big market that we need to look at and a great execution capability that we need to see, because we are early stage investors. At that time traction may not be very high, right? So just to give an idea, when we invested in Lenskart and in Myntra, both of them at that time were having a monthly revenue of $20,000, which is nothing, right? So at that time you only back an opportunity and the management team. In terms of a lot of money going in, so opportunity gets priced and only so much dilution which can happen for the money to fully leverage that. Are there potentially risks in this? Yes, if execution doesn't follow the plan, there will be softening in the market. It's not only here, even in US where there are enough unicorns that are, at last count there are about $147 billion valued private companies, which are all of anywhere from 2 years to 5 years vintage. The question is, can the public markets are far more rational and very quickly they adjust, right? So private market, it takes time. So our belief is that there will be softening, and there will be a little bit of brutal thing that people will go through, that who got from Series A to Series B, typically there is a 2/3 success rate. It could come down, right? We saw that in e-commerce. Till 2011, 51 companies got funded Series A, and at the end of 2013, only 16 got Series B. So it was like less than 1/3 which happened. And I think these things will happen. Today, hyper-local is a big theme that everybody is going after. And so there is a company which gets funded based on Gurgaon, some other company gets funded based on maybe Goregaon in Bombay. But I think all this will have to find the path. So there are people who will make money, there are people who will not.